Ramis Fakori here at the IRA Club, joined with TJ.
Well, hey, thanks so much, Ramez. Really glad to be here. Excited to present to the audience today. Again, appreciate you hosting this for us. Just for our audience today, wanted to introduce ourselves. We're Holdfolio. I'm on the line with one of my managing partners, Jacob Blackett. And just a little bit about Holdfolio. Who we are and what we do is we're a fully vertically integrated real estate investment firm serving thousands of individuals around the world. And our focus is bridging the gap between retail investors and institutional level real estate investments that were really once exclusive to a select few. Just a quick overview about our team, our core partnership here. Jacob Blackett and I, we lead the firm here, Holdfolio. We've been featured in a lot of notable publications such as Yahoo Finance, Morningstar, Business Insider, Benzinga. We're also official members of Forbes Real Estate Council. So we serve the marketplace by sharing insights on multifamily real estate and alternative investments, but we all are also industry leaders in the tech side of things, serving hundreds and hundreds of real estate investment firms and adopting digital transformation and growing their businesses. So that's a little bit about our partnership here. I'm going to go ahead and let Jacob talk a little bit about our background and history here in Holdfolio.
Great. Thank you so much, TJ, and welcome everyone. Thanks for taking the time to learn more about Holdfolio. I know there's probably at least a portion of you who are already familiar, maybe already investors with us, because we have quite a few investors with the IRA Club. So welcome. If you're a new face, I'd love to just take a couple minutes to go ahead and give you a little bit more background on Holdfolio. Holdfolio actually got started, it could be traced back to 2010 when I was actually a sophomore in college doing fix and flips. And on the single family residential side, I was doing fix and flips. I graduated college, had the decision to go pursue a CPA and finance world or continue on the real estate side. And I love the control and flexibility and the real world bricks and mortar real estate. So I continued on the real estate journey and had pretty good timing. I actually, when things really started getting successful for me, is right around when the Jobs Act passed back in 2012. And this point in my life, I was in Indianapolis and I was still focused on the single family side. And I was trying to figure out how to scale my acquisitions, go from purchasing 1 or 2 properties a month and really scale to 5 or 10 or more properties. And so this is where we actually created a website, one of the first in the country, one of the very first to actually source investment dollars from investors into deals. So as an investor, you could log into our website, create an account, and actually invest with us in our real estate portfolio. So here we are purchasing single family homes. We were bundling them into 10 properties to a portfolio. And as an investor, you could come and invest with us. And TJ alluded earlier in the call that we actually are technologists. We own a software company that hundreds and hundreds of other real estate sponsors use. And this was actually the beginning of all of that. So with this, we quickly built up a nice portfolio of single family homes near 200 in Indianapolis area. And we transitioned to multifamily properties in 2017, late 2016. We purchased our first multifamily property. We loved the ability to scale. So with a multifamily property, it's a business unit in itself. Single family homes, we had all these different single family homes all over town. It was a huge management task because that's our background. We did everything hands-on, right? So we would acquire, we would manage, we would renovate, construction, fully vertically integrated. We've had our hands in every single part of this process and are extremely familiar with all the interworkings. And so building up our multifamily portfolio was a great run. We had a lot of success. We actually started selling out of our single family homes. We timed the market really well. This was actually in 2019 when we began selling those single family homes. We are still exiting a few of our single family homes today, which is incredible timing. And what we were faced with was reaping huge profits from all of our investing and trying to reinvest in our markets. So we were in the Indianapolis market primarily, and we knew every owner in town, every property in town, and we felt like we had a ceiling. We were hitting a ceiling. We were trying to reinvest our dollars, build our portfolio, and that's actually when we decided that what if we place investments with some other operators, some other sponsors. We were rubbing shoulders with and got to know some really successful sponsors across the country. And so in 2019, we decided to go ahead and invest with another sponsor. Let them leverage their experience, their expertise, and get into a new market, get into new types of deals. And so that was really the start of our current business model, where we were starting to invest with other sponsors, and we thought, what our investors would love to get in these deals. These are amazing deals. How do we leverage our expertise and our network and let investors invest in these deals with us as we are building our own portfolio? That's our current business model. We still own and operate property, but this is what we focus on because we love this scenario where we're getting into deals that require $500,000 or $1 million check sizes, deals that were traditionally have one or two investors writing multi-million-dollar checks. And through our relationships, we can actually reserve and prioritize our place in these deals. And as a Holdfolio investor, you get a first look and really an exclusive opportunity to invest with us in these deals. We invest our money, of course, in these deals, and that's where we're at today.
Awesome. Thanks so much, Jacob. And going into the next slide here, proof is in the pudding here with the Holdfolio's track record. By creating these profitable partnerships, both on the investor side as well as a sponsor side, we've seen a tremendous growth in both our company, our portfolio, currently sitting at over $1.1 billion in portfolio value. Our total units within the portfolio is 6,442 units. And with the full cycle deals that Jacob mentioned, we've gone full cycle in 87 assets. And across those exits, we've seen an average annual return of 19.39%. So,
and I would specify, TJ, because some sponsors and investors on this call, you may be wondering, that's almost 20% annualized. Is that paid to the investor, or is that at the deal level? We're no fluff here at Holdfolio. We tell you, we show you what you want, what you need to know. This is an average annualized return to investors paid out of almost 20% on these 87 full cycle assets.
Yes, absolutely. That's an important point to note. So thanks, Jacob. So bridging the gap, this is a focus and a mission of ours at Holdfolio. And we wanted to just uncover a little bit about what that means, how we were able to establish our company with our vision of helping retail investors and individuals place investments in some of the best deals in the nation that were truly exclusive to a select few in the past. But by setting our business up the way that we have, we are really making the dream happen, allowing individuals to access these amazing private deals. So some of these building blocks are integrity, having more integrity, and also leveraging experience across the board, whether it's operating our local deals in our local markets or placing investments into strategic partnerships through these sponsors across the nation. Experience and track record is something that we really focus on to make these partnerships happen. More transparency, as Jacob mentioned, we are industry leaders in our proprietary technology. And so with this solution, we're able to provide more transparency in terms of reporting and helping investors really just have more understanding of where their investments are, their distributions, and other important metrics that they want to see. So all of this is centered on creating profitable partnerships, as we mentioned, both on the sponsor level as well as the capital stack with our investors. having these two key components is the building block of what makes Holdfolio successful and what helps our company thrive. We already mentioned technology. I would say probably the last thing is aligned interest. With aligned interest, it's really important that, there's investors that ask us all the time, how do we vet out sponsors? One really important piece is we're investing in all of our deals, including our sponsors that we do business with. They're, investing anywhere from 10 to 15% of the capital stack. And so having that aligned interest is important to know that you're working with a true partner. So this is just a few building blocks on how we are actually bridging the gap. And I can actually highlight from an operational perspective, further details on that. So with this new growth model, our investments have been growing, but so has our investor base. So we're now serving over 4,300 investors globally in helping them get exposure to commercial real estate in a more modern way. So right now our deals are open to also non-accredited investors. This is how we're also bridging the gap. And with giving them an opportunity to invest at a relatively low minimum, extremely low minimum of just $20,000. And so what investors are able to do is, as they're seeing our strong and frequent deal flow, they're able to place investments directly and have more control, as opposed to investing in a large fund that's more open-ended. And they're also able to diversify in multiple investments across different markets. Today, we're actually in over 10 markets and over 20 sub-markets that we've invested in. And the investments that our investors are making are completely passive. So we feel like we've really moved our industry forward in helping limited partners have passive investments opportunities in a more modern way. So that's one thing that I would highlight on how we're bridging the gap. Jacob, do you have any other things you would like to add here?
No, this is a great point, TJ. Everything is great here.
Awesome. Okay, an important thing to mention is our criteria as we operate our business. First things first is the team as well as the market. So on the operations side, we like to invest with best-in-class operators with really strong track records and a long experience as well. So as we identify sponsors that we work with, we're really meeting with a ton of sponsors on a weekly and monthly basis, only reserving, only working with a select few. And so we have very specific criteria on how long they've been working. We really prefer folks who are fully vertically integrated and have a really strong hold and knowledge base of their particular markets. And so having the right partners is extremely important. And I always like to say it's not just what you know in real estate, but it's who you know. That's how you're going to get the very best deal flow. And that's what we focus on the operator side. In regards to markets, markets is probably one of the most important things, even before the deal, is investing in vibrant markets that are tried and true, that can stand the test of time, have incredible job diversity, net migrations. We're seeing populations growing as well, and really have a strong job market. So we're currently investing in secondary and tertiary markets in the Midwest, Southeast, and in Texas. So all really strong and hot markets. On the asset type, our bread and butter is multifamily. We love value add component projects, otherwise strong risk-adjusted returns. And then mid-market or better is the asset class that we focus on. And so that's on the asset type. Last year, we actually expanded our portfolio and not just investing in multifamily, but now we have invested in hotel development. We did our first one last year, new construction, and also senior assisted living products in the Midwest. So very excited about how we're growing and expanding our asset types. On the returns, all strong risk-adjusted returns are considered, but typically our deals we want to deliver at least an 8 to 10% cash on cash return and a 15% or more IRR, typically over a 5-year hold. Okay, so moving on, we're going to share some recent deals just to kind of illustrate how we operate and in some of the successes that we've had. So I'm going to go ahead and turn the time over to Jacob.
Thanks a lot, TJ. Let's go ahead and take a look at a few deals. This will give you an idea of the types of deals we're doing. This deal right here, Provenza at Southwood, this was a July 2021 investment, and it was a 248 unit apartment community built in 2007, located in Tallahassee, Florida. The reason we loved Tallahassee in this scenario is that it's actually one of the fastest growing economies per capita in Florida. So that's amazing in itself. And with a 2007 build property, you have a property that is relatively new, but old enough to be just outdated. And so when you mix that with a little bit of mismanagement, you have a perfect scenario. For example, with this property, we're coming in, renovating all of the units over a 3-year time frame, keeping occupancy very high during this phase so that you can actually renovate and turn units and do an improvement project while also collecting good cash dividends, having strong economics like debt service coverage ratio, make sure you're paying that debt with plenty of margin. And on this project, the rent per unit on average is looking to increase by about $300 post renovation. So that's a really nice push, which will increase the value tremendously of this property. The business plan is within 3 years to do a HUD refinance. The sponsor that we're working with on this property, they specialize in this scenario where they're bringing in a long-term HUD refinance loan, which is 35 years amortization, an interest rate that you wouldn't believe. And so it just makes a scenario where you're getting the vast majority, if not all of your capital back within 3 years, and then you're cash flowing until eventually selling for a price that you didn't initially project ideally. But that's a great place to be in. This deal came with a 7% preferred return. We're targeting 18% or more annualized returns when it's all said and done. And the operating partner on this deal, they actually have been operating since the late 1980s. A very veteran group. They've purchased and sold over 12,000 units across the United States. One of our preferred partners.
Absolutely.
Let's go ahead and take a look at the next deal. So in June 2021, we went ahead and invested in Heritage Apartments. This was a 143 unit apartment community built in 2000. It's located in Hillsborough, North Carolina. So here you can see a little bit of a trend. This is a 2000 build. The other property is 2007 build. Very similar business model where it's newer, it's in great condition, but there's still opportunity to make improvements to get it up to date, make it competitive with some of the newest A-class assets in the community. Property is 98% occupied at acquisition. This was actually offered as a portfolio deal. So sometimes when timing is right, when we look at a lot of deals, every day it feels like we're looking at a deal, considering it. And when we do decide that we found an investment opportunity, if we have a couple that are timed right, we'll actually put them together. So what this does for you is it gives you the opportunity with one investment to get into 2 separate deals and diversify your investment, which is great. So this was actually a part of a portfolio deal with 2 other deals. The business plan is to return capital within 3 years through a HUD refinance. The premiums post renovation on this deal were estimated at about $340 on average after renovation. This deal did come with a 7% preferred return. That's typical on our deals. We're typically getting a preferred return. It's been a long while since we've been in a deal where a preferred return was not part of the structure. And we have some really incredible 20% plus target annualized returns on this one. The operating partner owns a couple thousand units. and has been operating since the 90s as well. A great veteran group. Let's go ahead and take a look at the next one. And this next deal, Vantage at Wildewood, we actually invested in March of 2020. The reason I wanted to highlight this is because this property, a 264 unit built in 1998, is actually under contract for sale. And so while we acquired this property, the expectation was to go ahead, do the renovations, improve management, do a refinance loan. But in less than 2 years, we actually received an offer that was far and away exceeded any expectation. It was one of those offers where it was too good to refuse, even though we weren't planning on selling. It was an incredible offer. Our investors and ourselves on this deal will actually double our initial investment in less than 2 years. And so very strong deal, and really encapsulates and reflects the types of deals that we look to do in terms of unit count, vintage, and location. Of course, this is an amazing outcome. We like TJ mentioned, we usually target between 15 and 20% annualized returns. So this one of what will come out to probably be more than 50% annualized. Of course, we'll always be happy with that outcome.
Absolutely. That's wonderful. So before I share the process to invest, I really wanted to highlight a few things as Jacob was sharing some of our current and current deals. There is a common theme, and one thing I wanted to highlight is that as we're executing on the value add business plans for these multifamily projects, it shows how important it is with our focus of working with experience that are in sponsors and partners. A lot of these projections that we've been able to calculate, they're based on experience from operating in those markets with our partners. And it takes a lot of the guesswork out and really helps us manage the business plan for these projects. And so really love sharing these three, but that we've done multiple, and just wanted to highlight what we focus on. Jacob, do you want to end with anything on that side for the deal flow?
That's a good point, TJ. We typically have 1 to 2 deals per month, as a FYI to you. So it's a good deal flow. We get a lot of deals across our desk, and we're really trying to cherry pick the very best deals. And that sometimes we may go a month or 2 without a deal. That's something we can't control. We never feel pressured to get in any certain deal. And that kind of goes back to also what TJ mentioned. We don't have an open fund. We don't have an open-ended fund. We like to take this one deal at a time, let you get familiar as an investor with the deal, with the market, and make those investment decisions rather than that kind of big fund type style.
Yeah, absolutely. Great points, Jacob. Thank you. All right. So how do you invest with Holdfolio? Very simple and streamlined process. The first step is to sign up at holdfolio.com. After you sign up, you'll actually have access immediately to your investor portal. But then we'd like for us to actually get to know you and develop a relationship, learn a little bit more about you as an investor, kind of your goals and how you're looking to diversify your portfolio. And so we typically will always set up a call before we provide more access and details to our deals. But this allows us to get to know you a lot better. And so on that call, you'll schedule either with me or one of our investor relations managers. And the third step is once we get appointed, and we will typically open up your portal or give you access to our deals as they come. You'll be able to review all the documents necessary to perform due diligence and make an investment. And then the last and most important step is kick back and earn passive income. So that's our process there. Go ahead, Jacob.
Great recap there, TJ. And what I want to highlight is we're operators, and you'll get to know this very quickly. We're pretty technical. this call that you schedule, it's not a sales call. It's really an opportunity to just understand what type of investments you've been making, see if it's a good fit with us, answer any initial questions you have. Typically, you'll almost always have a few questions, and then that will actually give you the opportunity to see deals. So don't overlook that second step. It's a quick call, and it's actually required for the types of deals that we're doing. So we're required to have that call as part of our process of getting to know our investors. And so that's all I'd like to add here.
Okay, great. Thanks, Jacob. Okay. We want to end the presentation, first of all, by thanking Ramez and the team. Have really enjoyed the partnership that we've been able to develop thus far with the IRA Club. As Jacob mentioned, we have a ton of our investors who are signed up and have accounts with IRA Club. And you know, we're just really grateful for the opportunity to share a little bit about what we do here at Holdfolio. To learn more about us, you can visit our website at holdfolio.com. You can also email us at info@holdfolio.com or give us a ring at 866-206-8993.
Yeah, thank you so much, Ramez. And just to mention, I am actually have been an account holder with IRA Club for over 10 years now with an IRA account and a 401k account. And it's always nice to have a custodian that's going to support this process. We've had such a good experience and success with IRA Club account holders. And so truly thank you again for your time today.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.